Hey guys, welcome to my channel. Brad here. So today I want to talk about options versus stocks. Are options better than stocks when it comes to investing, making money in the stock market? So let's talk about what options are first, and then I'll talk about my experience with options and how I think they fit or don't fit into a long-term investment approach. So essentially what an option is, well, the options that I have experience with are called LEAPS, long-term equity anticipation securities. It's, a fancy way of calling an option that's kind of a long-term option. And the ones that I was buying probably about 6 months ago were Micron LEAPS, and those were calls. So essentially how that worked is, they were $1.50 per share. When you buy an option, you have to buy an options contract, which essentially gives you control of 100 shares. So in this case, I was buying Micron LEAP calls, which meant, the expiration date of the options contract was about 1 year and 3 months out. Anything longer than, I believe it's 1 year, is considered a long-term option, okay? Now, so at the time when I was buying, the price was around $1.50, okay? But because a contract controls 100 shares, my price for the contract was $150. And I don't remember exactly what it was, but the share price when I was buying was around 45, and the strike price for the option was 70. So what that means is anytime in the next 1 year and 3 months, I can exercise that option contract to buy 100 shares of Micron at $70 per share, okay? Now, the price is 45. You think, why would you buy something that gives you the right to buy shares at $70? Well, this particular bet, a call option, is betting that the price is going to go up, okay? So my hypothesis was that within the next 1 year and 3 months, Micron was going to be trading above $70 per share, okay? But you don't have to exercise. So essentially it gives you the right to exercise, to buy at $70 per share, 100 shares. But there's also a price that moves up and down whenever the stock market is open for the contract itself. And so that's what I did. I would buy and sell the contracts without exercising. And that's typically how most people do it. And so I would buy at around $1.50 per share, or 150 all in. And then when it would move up to, I think it was around 220 or 230 per share, I would sell. And because Micron was quite volatile during the time when I was doing this, it was working out where every week or two I was able to buy at 150 and sell at 220. And I did that probably a handful of times until the price started to run away from me. It went up to 220, but then it kept going up. And so that strategy wasn't going to work anymore. And so I stopped. But that's essentially how options work. You're buying, if you're doing call options, you're betting that a stock price is going to go up. You're basically agreeing, or what the contract says is that you can exercise 100 shares, whatever the strike price is, before the expiration date. And so the longer the expiration date is away from when you're buying, the more time you have for the price to move on the underlying stock for you to make a profit. That's why I like LEAPS, because they just give more time. The price, they say, is built in, so it's a little bit more expensive to buy a LEAP than to buy an option that expires a week from now. But what I was doing, for what, for my purposes, the leaps just felt better. I had more time to let the price move. Now, the reason I'm talking about options, I see channels like Ryan Scribner talking about Nautilus options. I see Financial Education, Jeremy talking about, these oil companies, Nordic American Tanker, which is an oil storage company. And they're talking about options. And, it makes me nervous. It makes me nervous because, options aren't, it's very risky, okay? Because, especially when you're dealing with these shorter term options that are going to expire a week, 2 weeks, a month from now, you need that stock price to move in the next couple weeks in order for you to make a profit on that. If it trades sideways or if it goes down, you're going to lose everything you put into those options. So that's what makes me nervous about it. And even worse, in my opinion, if you make a lot of money trading options, now you have this expectation, you have this subconscious expectation that it's easy to make money in options. And you start to plow more and more money into these things. And I just think it can be a very slippery slope, okay? When you see yourself making money very quickly, you're doubling your money every week or two by trading these, very volatile instruments, very risky instruments in terms of what your expected return is versus your expected loss. If you take a kind of a rational assessment of what your probabilities of gaining and losing are, you could hit a few home runs early in the game, right? And then you think, oh man, this is easy. I can double my money every couple weeks, and I'm just going to keep plowing those returns right back into the next bet. It's not a sustainable strategy, okay? So when you have these early wins and you start to think it's easy, that's when you get cocky. You start to put more and more percentage of your portfolio into these option bets. And at some point, you're going to blow up. You're going to lose it all. And the concern here is that you think it's easy even when you lose. And so now you borrow money to try to make it back, okay? And it's a very slippery slope. It's a very dangerous game to be playing. I think if you're expecting to earn in investing any more than, well, what the greats have made over the long term. Take Warren Buffett, take Monish Pabrai, they can double their money every 2 or 3 years, which is amazing. If you do it in 3 years, that's a 26% annual return. If you do it in 2, it's a 35% annual return. Those are incredible numbers when it comes to investing. But for people who are just getting started, they don't know that that's kind of where the high bar should be set. So you get a couple wins early on in options and you start to think, oh, that's where my bar should be. I should be able to double my money every 2 weeks or every month. And guys, it's not a sustainable game to be playing. So that's my biggest concern with these options is, as a new investor, you get a taste. And you taste the victory. You taste those quick returns. And then it's like a drug. And it won't end well, guys. Just look at the casinos. Look at people who are kind of mindlessly popping money into the slot machines or the roulette wheel. It does not end well. It's possible to win, but if you look at gamblers and you look over the lifetime of gambling, are they going to have some wins? Absolutely. And that's what gets put on the billboard. I just saw a billboard recently. This woman made, $10,621 in one day, at the slot machine. But of course, it's not going to talk about all of the losses she's had over her lifetime, which surely are more than that $10,621. So, it's really important. It frustrates me when I see these YouTubers, these big channels talking about, buying stock options. First of all, it's a very small percentage of their portfolio. Second of all, they have all of this ad money coming in, right? They're not making their wealth in the stock market. They're certainly not making their wealth investing in options. They have a very robust monthly income coming in from this ad revenue through YouTube and courses and whatever else they're monetizing. So it's really important to kind of see the big picture when these big YouTubers are talking about buying options. See the big picture. Know that it's a very small part of the game that they're playing. And I highly recommend just staying away from options, especially if you're getting started. Learn how to buy companies cheap, buy great businesses cheap. Learn the discipline that it takes to hold those companies until price comes up to match value. This is tried and true value investing. It's really fundamentally a safe and reliable way to invest for the long term, to grow your wealth over time through the power of compounding. In order to finish the game, you need to stay in the game. Okay, so I'm going to get off my soapbox now. I just wanted to kind of address this. Are options better than stocks when it comes to investing? Yes, they're sexy. Yes, you can get fast returns, but they're very risky. There's a very high chance that you're going to lose money. So just make sure you understand the big picture when you get into options. If you do want me to go in more depth about the leaps that I've done with Micron, just talk about my approach there, I'm happy to make a video about that. So let me know in the comments. And yeah, thanks again for being here, guys. Smash that thumbs up. It really helps the algorithm. And it'd be great if you subscribe. I'm trying to grow my subscriber base to 1,000. I'm at 550 now. I'd really like to monetize this channel so I can, continue to bring you guys value every day and have, a little bit coming in just to keep it sustainable. So anyway, have a great day. Stay safe out there. I'll see you guys in the next video. Take care.